Guys, here we're in the Everything Money Gym. This place is incredible, and we're going to talk about Peloton today. Before we get to the studio to check out the financials, what the hell is happening? This is the bad boy right here that's causing all the problems. Paul, slow that down a bit. What's happening is babies are getting their heads stuck underneath here. If you put it up a little bit, underneath here, dogs are getting their tails stuck. And the design for a male, for an adult, is gorgeous. But if you have kids, they're going to just fire the whole design team, I would think. So let's head over to the studio, check out the financials after this stock fell a ton. Look at that booty over there. Okay, we're back in the studio. Paul, Peloton fell a ton. A year ago, gosh, it was upwards of 160, almost $170.
No, not a year ago. 3 months ago.
3 months ago. Look at me. The point is in all of our comments for a lot of videos, Paul, they say you're too disciplined. Do you buy any stocks at all? Are there any stocks that you like? And you say, well, this stock has to fall in half. Of course, everyone breathes a sigh of disregard because that can't happen. But sure enough, it has. So where does Peloton go from here?
Look at this. 167 right here. 167 in January. Okay, we're now at $87, $83, something like that. Guys, it's not that when you have a bull market and you have the companies that everybody loves, which is the fast growing, exciting companies, fall in half. Yes, did Peloton have an issue in the last few days? They did, but what was it in January and February that caused this peak to come down? You've got to remember that during a bull market, if stocks are going to fall in half, imagine what will happen in a bear market. For those of you who don't understand what a bear market is, because we haven't seen one in 12 years.
I'm glad you said that, because sometimes I'm a little foggy on it myself.
A bear market, technically, is when the stock market falls 20% or more from its peak. Okay, so last year, during the COVID crash, that was a very, very short bear market. I'm talking about a longer bear market, which is pretty standard when you have bear markets every 5 or 6 years. So when you think the stock, well, like, we talk about Google. Paul, people get comments. There's no way Google falls in half. You're gonna be waiting forever. Okay, then I wait forever. That's the thing you gotta remember, is that I'm okay if they never fall in half. The point is, there's 10,000 stocks out there. If I wanna own 400 or 500 of them, there will be a couple hundred of them that fall in half at some point that hit my price targets. That's what you need to do as an investor, is get your list together, get on your Everything Money software, be able to find the stocks that you want, and just keep track of them and make sure that you're aware when they fall in half, or whatever they fall to whatever price target you want them to, you're ready to buy them.
Mo, what does Peloton have to do with this full recall of treadmills? You mentioned some numbers. How is this going to affect them doing this?
I mean, I look at the Tread Plus. Now the treadmill, they have the Tread Plus and the treadmill. The Tread Plus is $4,300 before tax. So they have said that they're going to come out and refund. If you want a refund, they're going to come pick up your machine for free, give you a full refund on it. If you want it moved, they're going to come to your house for free, move it to a quote unquote safe place where there's no kids or pets, and do it that way. So they don't disclose their numbers. They don't disclose how many Pelotons bikes they sell, Tread Pluses they sell, treadmills they sell. So it's hard to say from a quantitative standpoint.
Paul, let's look at our 8 pillars real quick and see where this company now sits now that it's fallen in half. And we're going to try to determine maybe a price target that maybe, Paul, you might like it. Paul, I would believe that you still believe in this company. I mean, I think they have greater things to come in the future, but right now they're going through it, right?
Yeah.
Tell me, baby.
So, I believe in pretty much every company as long as the price is right. I mean, I'm still, you look at different philosophies of business. Warren Buffett is now in the, I want to buy great businesses at fair prices, okay? He's willing to pay more, but the reason is he's got $200 billion to deploy. He can't go out there looking for the $100 million company that's going to, even if he finds the right $100 million company that goes up 5 times in 1 year, how much return is that on $2 billion? It's 1/4%. It's not going to move the needle. So he needs to find great companies at good prices. What I'm trying to do is I'm trying to find both. I do want companies for the long run. I'm also trying to find value plays. Now, is Peloton a company for the long run? Potentially, because if you ask somebody who's the market leader in treadmills, sure. I don't think it's a question if it's Peloton or not.
Yeah.
We own 2 of them in our gym here at the office, right?
Yeah.
We pay a monthly fee to have them. They're great devices. They're expensive. but they're awesome. The community is great. You can do the classes. You can like people. You can talk to people. So it's wonderful. I do believe Peloton at some point, when it's a more stable financial company, I mean, let's just skip to it. Look at the income statement here. We've got 3 years of data going back. I mean, look at this revenue jump. These revenue jumps are incredible. $368 million in 2018 to $3 billion in 2020.
Jeez.
Yeah, I mean, it's insane how well it's done there. Now let's look at the profit numbers. Net income. It went from losing $110 million to making $166 last year. I mean, that's great.
Can you explain to me as a layperson the discrepancy between that enormous $3 billion revenue and only 166 millions of actual profit?
So it's a little over 5%. You got to remember, guys, companies like this are spending a lot of money marketing to get out there. And that's when I get insulted when people say, you don't care about growth. I 100% care about growth. But what I'm trying to sit there and say is, don't overpay for the growth. I guarantee their margins are going to be a lot better as they grow because they're spending a lot of money on advertising. I mean, look at this. SG&A expense, which is sales, marketing, generally $1 billion out of $3 billion in revenue.
Mo, are you seeing all the commercials that I see with the sweaty people on the bikes?
And they're all hot as hell.
Everywhere. Yeah. They're everywhere.
Yeah, they do a great job. I mean, they do a great job. Like them and DraftKings, it's like my whole life is just filled with these two commercials.
I mean, they're going through a bad time right now, but to me, I look at it. They're going to definitely get through this. They're the leader in the industry. The community is incredible. Like we talk about it. I mean, we have our own hashtag for EM Cardio.
Yeah, EM Cardio.
And we can get in there on a Saturday and I'll take classes together.
And by the way, join that. Follow, if you have Peloton at home, we'll follow hashtag EM Cardio.
In the Discord, yeah, for sure.
Yeah.
Oh, you have to be in the Discord?
Let's put it on the video afterwards.
Yeah, sure.
Okay.
You can see it.
So, but here's another thing. When companies are growing fast, look what they're doing.
Shares? Oh, no.
Issuing a lot of shares.
Yeah.
Oh, boy.
Uncle Seth, I mean, they're just issuing a ton of shares here. Look at this going,
Well, isn't that expected with a high stock price and overpriced?
Yeah, that
stock
is
price?
expected. But at the same time, you want to then go, we always talk about the 8 pillars. The 8 pillars are not a, let me go buy or let me not buy. It's a, let's tell a story. Mm-hmm. This company is growing fast. They're issuing a lot of shares. They're very expensive. Uncle Seth here has paid attention to my tutelage over the last year because that's exactly what I talk about. I'm okay, rather than taking on debt, go issue more shares. When I say I'm okay, I don't want it to become a habit. Remember, everything is good or bad depending on when you do it, how you do it, and what the mentality behind it is, right? Mm-hmm. I just don't want the habit forming of every single time they need money, they issue more shares, right? We still don't want them issuing too many, but this is a big jump. And I want to make sure this is a 30% jump. I want to make sure this isn't a company that's just going to say, oh, we need money, let's go issue more shares. And someday when they are reasonably priced, what is their market cap right now, by the way?
Didn't even look. Shame on us.
And this is when you go to the 10K and you see, why are they issuing
I was just going to ask you, Mo, if you open up the 10K, Paul, will it tell you how much they're making off the online subscriptions? I mean...
Yeah, they'll break down the revenue on unit sales, like actual physical unit sales versus online subscriptions versus how many members they have, et cetera. And I think when you look at them, I'm kind of surprised they don't disclose those numbers. Are you sure they don't disclose the numbers?
So this is based on a Yahoo Finance story that I read this morning on the morning show that they said they do not disclose the numbers for their products that they sell.
So I mean,
why would they do that?
I don't know. But I mean, after seeing it, like I did say earlier, Apple is doing that with their iPhones for whatever reason.
But see, the thing to me is, Apple's doing that for the iPhones because I think if I'm a CEO, and I'm just saying hypothetically, if I'm a CEO,
go ahead,
and I don't want to show slowing growth, and I don't want to have people worry about that, I would say, we're done disclosing this number. Because I'd be fearful what the number would show.
Yeah.
Now, if Peloton's total policy from day one was, we're not going to disclose unit sales, we're just going to disclose total revenue, and I respect that. Fine by me. But had they ever disclosed it? I don't know. That's the thing that you have to sit there as part of the story of saying, okay, Apple stopped disclosing iPhone sales. Why is that? These are all part of the things that you have to understand. Is the company looking after me as an investor? Because if they're just keeping information away to kind of prop up their stock price, you got to think about that. I don't know or think Peloton's doing that. I like the fact that actually, if I were to guess, I would have guessed before looking at this that Peloton was still losing money. So the fact they made money last year, I'm like, okay, that's pretty solid. You know what I mean?
This is very surprising to me.
In a general business sense, you love dumping money into marketing. I mean, right? You're a big fan of
I'm all about it. That's why when people sit there, we see this net income of 166 million last year. I'm like, okay, and that's 145 PE. That doesn't tell me anything. What's more telling to me is this market cap of 24 billion and sales of 8 billion. That's 8 to 1.
3 billion, you said.
Sorry, 3. I was doing the eight in my head. 3 billion, so it's 8 to 1 sales. That's a little high. Now, some people would argue this is a software business because they have a monthly membership for their software.
That is pretty cool.
I can buy into that because I imagine. So, what do we pay per month? $40 a month, is it, Mo?
Yeah, $40 a month.
I mean, what's the margin on that? The gross margin, that's got to be insanely high.
Yeah.
Insanely high. I imagine the margin on their physical goods is not as high, obviously, but when you get the monthly, I love monthly recurring revenue. That's why I love real estate. That's why I love our software. The monthly recurring revenue is going to be so as they grow and grow and grow, that number, yeah, I'm sure. Hell, it's like, remember video games when you were younger? You know, selling the unit was a loss leader. They didn't care about making money on the unit.
Oh, really?
Oh yeah, they would lose money on the unit or break even at best because their comment was, yeah, but we're gonna sell the game for $60 and our profit's $50, not $60.
My mom bought me every game ever. I was so spoiled, man.
Did she really?
Mortal Kombat 2 for Sega Genesis would come out.
I never had a Sega.
Oh, yeah.
Right to
I
the
never
store.
did too. First system I ever had was a PlayStation 1.
And if it broke, my mom would buy. I love her. Mom, you know I love you. Like them patrons. We'll keep going, Paul. Let's look at the financials.
So I mean, so first off, this profit margin's a little off here because it should be about net income is 1.6. So it's about 5% here. So there's still both X's here, guys. But look at this gross margin. Oh, look at this gross margin. See, this includes unit sales. This includes them selling
44%.
Yeah, and that includes them selling actual physical treadmills. Yeah. I have a hard time believing they have 50% margin on their on their treadmills.
Mm-hmm.
Yeah.
The software is probably 90% gross. I mean, it's probably
right.
something insane like that.
While you're on that, this is the story from Yahoo. While Peloton does not disclose sale figures for treadmills. So.
Oh, for treadmills.
Treadmills. Treadmill and treadmill plus. So that's what treadmills
But what about the
mean.
bike? You have a bike.
Bikes. Yeah, I don't know if they disclose that.
Okay. So either way,
Would you look at current assets
This is
here?
when you go into the 10K and you look at these things to see if it's broken down.
Yeah.
Would you look at current assets here? Does it matter?
Let's check it out. We did the income statement, checks on everything but shares. Shares are an X.
Yes.
Because the shares are going up. Balance sheet. Current assets, $2.9 billion. I mean, look at this. Yeah, this is great. Total liabilities, $2 billion. Total current liabilities, $1.38. Guys, they have more cash on hand than total liabilities of the company. This means if you're at home, you can pay off all your mortgages, your car payments, your student loans, your credit cards, all with the money in your personal checking account.
So you say this all the time, and I nod along, but what does it mean for this company having this much cash on hand when they may be buying back their product or sending guys out in trucks to replace their product? I mean, what does that excess money mean for Peloton?
Well, for one thing, is it more likely or less likely that you're going to go bankrupt if you have more cash on hand than total debt?
This was the case for Carnival Cruise that you loved last year so much, right? I mean,
I knew they had a lot of cash on hand. Their cash did not exceed their total liabilities. But imagine if you're at home and your checking account has $500,000 in it, and all your liabilities for everything is $300,000. Are you going bankrupt anytime soon?
Yeah, that'd be great.
Yeah, there's no way it'd be very difficult. Mm-hmm. Doesn't mean it's never going to happen. But I look at a company like Peloton that's got to invest in their growth. I look at it going, great, they don't have a lot of debt. So they can easily invest in their growth. And the other thing that we don't talk about much, what I like about them is $2.9 billion in cash, $500 million is inventory. Usually inventory is one of the biggest numbers. You got to discount it. We don't talk about that in this channel. It's a little more detailed, but usually you have to discount inventory big time. Inventory only makes up 1/6 of their 22% or 18% of their total cash on hand. So I'm loving it.
Yeah,
and this is a great brand. Like nobody looks at Peloton and goes, "Oh, that's a crap product."
Mm-hmm.
Peloton's like it's like Tesla. It's like Tesla. People just love Peloton.
And I look at let's look at other things in the industry that came out with Peloton, the mirror, that Nordic track machine. Like I look at those things, and those things are like the baby brother compared to Peloton. I mean, Peloton is up here.
Didn't Amazon come up with their own?
Amazon came up with their own Peloton, basically.
Did it work?
I mean, I don't know.
What's it called?
I don't know.
That's the point. What's it called? We don't even know.
Yeah.
Mm-hmm.
Has it come out yet? Has it not come out yet? Like, remember when Amazon tried to make a phone?
Yeah. Yeah.
Did that work?
No.
Is that still around?
I don't know.
The Kindle? Who uses a Kindle?
No one. They
Grow
use the
up.
app, but they don't use the
grow
device.
up.
Right.
I used to have a Kindle.
I used to have a
I
Kindle.
launched it against the wall going, this thing's terrible. So Peloton from a brand perspective, is there a moat? Warren Buffett talks about a moat, and I don't want to just harp on Warren Buffett and say we should mimic him. I don't think there's a moat here.
I don't think so either.
But
They built the community very well.
they built the community very well. It's going to be very sticky. These, this whole people dying from the treadmill, I mean, I'm not trying to be dismissive of death. It's not that at all. I don't know if it's a real, I mean, Mike Tyson, if you remember, Mike Tyson had a daughter who was 4 and accidentally died on
What was it
some
again?
machine. But it's like, I don't think that was because of a faulty machine. You know what I mean? It was because, unfortunately, no one was watching on her and she got wrapped up in a cord and all that stuff. Like, it's not, and I'm not trying to dismiss anything. It's just, I don't think you look at this incident and say, oh my God, this is the end of Peloton.
Right.
You know what I mean? If we had a bunch of regular users who were walking and all of a sudden getting zapped and dying that way, that's a more long-term problem as opposed to a fluke accident. You know what I mean?
Yeah.
Let's look at their free cash flow, which is pillar number 7. And Paul, I'm assuming with their great year last year, it's completely absurd. Maybe you have to throw that last year out in terms of.
Yeah, so they didn't even have, if you look right here, guys, in our Everything Money app, which is so wonderful and great, which costs you 80 cents a day to have it. And if you look right here, I added the free cash flow number here. Now, we don't have 5 years, but look at this. They lost $5 million in free cash flow in 18, $547 million in free cash flow. But even on last year, at a 25, what was the market cap, 30 or 25?
25.
So 25, even at 547 million versus 25 billion, we're talking about a 48 times free cash flow. That's a lot. Now,
Still that high.
oh yeah, I mean that's the thing. It's a lot of money here. Now, does that mean it's too much? Peloton is growing. So you have to decide for yourself, how much growth do you need to justify 25 billion plus extra? So remember, guys, you're not trying to buy it for 25 billion because it'll be worth 25 billion in the future. What your job is to say, I'm willing to pay 25 billion today because I think it's worth 100 billion or whatever the number is in the future, 5-10 years from now, whatever the number is. That's part of your analysis. So when the biggest mistake I see people make is they pay this saying once they get stabilized, they'll be worth this. Well, then where's your cream? You're just paying for the cream today. That's not the way you should look at an investor. What you should look at an investor and say is, hey, this company generated $547 million in free cash flow. If I'm willing to pay 20 times that, let's call it an even 10 billion. Okay, but they have a lot of upside potential. That's what you should be looking at. If the upside potential is way higher, factoring in a lot of risks and factoring in a lot of unknowns than 25 billion, that's how you justify it. But let's say you want it to be a $50 billion company in 5 years. And a company, because it's stable. Let's say it's selling for 15 times free cash flow. You would want $3.3 billion in free cash flow. So your question is, they did 547. You want to get to 3.3 billion stable in the next 5 years. Is that reasonable? With all the other financials staying pretty consistent? That's the question you need to ask yourself as an investor. Because along the way, because if you're trying to go for it to be worth 25 billion, which would be 1.6 billion in free cash flow, then you're just breaking even. Because you're paying 25 billion for it and it's worth 25 billion in 5 years. You've got to remember that. Every other investor out there will sit there and say, look, by the way, experts. I once got pitched a real estate deal by a broker, the guys you guys consider all experts, where he said to me, Paul, if you put 10,000 per unit into this property, it'd be worth 30,000 a unit more. So what price did they ask? They asked the 30,000 per unit more. I'm like, well, then there's no upside for me. He's like, no, Paul, you don't get it. If you just put $10,000, yes, but I'm already paying 30,000 unit more. If I put 10 grand in, so it's worth that 30,000 unit. I'm now into it for 40,000 unit and it made 30. I lost money. Mm-hmm. That's the point, guys. That's entirely the point. So this is everything about Peloton. I love the brand. I love the treadmill. Mo and I use it almost daily. One of us is using it daily. I'm on it 4 or 5 times a week. Tim and I have treadmill sessions. He uses the one treadmill here. I use the Peloton.
Forget all that BS. What is your new price target for buying Peloton if you believe in so much of this company? I love you. I love you. You know that. It's at $82.
It's not. I'm not going to look at the dollars per share. I'm going to look at the market cap. So I think to myself, I haven't done enough research, Seth. Mm-hmm. Right? So I haven't done enough research. So I have to sit there and determine, okay, if they did 550 this year and it grows 10% a year, so 550 million in free cash flow this year. Next year, 605. Next year, 665. Next year, 730. Next year, 800. So 800, let's say I'm willing to pay 15 times free cash flow. It's $12 billion in market cap. It's currently selling for 25. So it's way too high. But if I think it's worth 12 billion in 5 years, this is 1, 2, 3, 4 years, what am I willing to pay for it today? A lot lower than today. You're not going to like the answer, but it's about $15, $20 a share.
Oh my gosh, good lord.
Well, guys, remember, this shouldn't be a shock to you because in overhyped, overbought, overbullish markets, the most exciting companies get the highest valuations. This company hit an intraday peak of 171 in January, and now it's down to 82. So you said there was a Paul, it's not going to go down to 15. Why not? Amazon in 2000 went from 107 down to 6. And we all know where Amazon went. Now it's at $3,500.
$3 billion. I do marvel at these companies. I was just in Columbus, folks. I lived there for the last 16 years. Companies like Homage, Jenny's Ice Cream, Rogue, the weightlifting. When these companies can reinvent such simple things as like t-shirts, ice creams, and exercise equipment, I'm always amazed like how the world has just caught on to this company. Something that they're doing like Rogue. I mean, weightlifting, like.
And what's the difference between one weight versus? And by the way, what's all our weights in the gym?
Are they Rogues?
Rogue.
They're Rogue.
Of course they are. Mo, are people in the Bidnass Nation? What are they doing with this interesting stock right now? You said shorting yesterday.
Yeah.
Give us the flavor.
So right now I look at it and I'm zoomed out a year and I just draw a line across here. So this is kind of they're kind of at a support line right now. To me, they need to hold this support line or they can start falling down here. If you look at the stock price just a little over a year ago in March of 2020, it was $18 a share.
Come on.
So it can happen.
I can see those.
Wait a second, March 2020 was $18 a share?
Yeah, I'm looking right here. It was March 16th of 2020. It got to a low of $17.70 a share.
He's right. Yes, he's right.
So, I mean, guys, we sound crazy, but these things can absolutely happen. But back to the trading aspect, this line right here, this is a support line. If it breaks through that, watch out. I mean, they have earnings this afternoon, and we can see what's going to happen. But as for doing a short on it, yesterday was a beautiful short because you had the downfall from the last couple weeks, and then all of a sudden you got this big engulfing candlestick that dropped 15%. And you had a great stochastic. So if you want to, you can just keep adding to this thing as it goes down. If it breaks that support line, who knows where this thing can go. I mean, this thing can fall like a flying crowbar.
Wow, flying. That's it. I've never heard that before. All right, well, that's our take, Paul. That is our take on Peloton. What a long video. Look at that, guys. Hopefully you stuck around. Make sure you fondle that thumbs up on the way out. If you love this idea of looking at the math behind a company, it might be rather refreshing to you as opposed to every other channel besides us and Sven, just hyping up the stock. This was a hype stock months ago. It's why we've looked at this before. Paul was very much against it when it was twice the price.
And I guarantee in January, people were saying there's no way it's going to fall in half. If we'd said buy it at 80, Paul, there's no way it goes in half.
I'm sure they're on the
It's
comments
only
of the
growing.
video. Yeah, I'm sure
it's
they're right.
only going to grow. Okay.
Mm-hmm.
And you might sit there and say, hey, hit March 18th, which was the market. But yeah, of course. But guess what? I think the stock market's more likely to go to 2,000 than 6,000. Could I be wrong? Absolutely. Because last year I never thought the market would hit 4,200, but it did. So just be patient. Your job is to find, there's 10,000 stocks in the US to buy. Find the 20 or 30 that fit your criteria and be strict because you've worked too hard for your money. People always forget downside risk. Go find the companies that are stable, that have a good justification for owning. You're less likely to lose money on them.
Check out the Patreon if you want that software behind Paul, and we'll see you in the next video. Thanks for watching. Love you.